You've tuned into ET Now, and this is Buy Now, Sell Now. I'm Karunya Rao, and let me extend the welcome to Alex as well, who's joining us today on Buy Now, Sell Now. Let's look at the markets before we get deeper with into the conversation with our guests as well. Nifty has not yet bounced back. I mean, not yet updating the website. You have BSE, however, trading higher by about 327 points as we speak. So it looks like, the resilience that we saw, the bounce back that we saw yesterday continues today as well. Kunal Bothra is with us. Let me take it across to him. Kunal, which way do you think we are headed from here on? I mean, do you sense some further jitteriness or some minor blips going forward as well, or are we back on the path to sort of growth?
So I think two ways need to look at. First of all, good morning, Karnya. There are two ways to look at. One of them is from the expiry front. The Nifty fell by almost 800 points, Bank Nifty fell by 2,000 points. So, and it's bound to be because when you see some 4-5 days of a straight consecutive corrections, naturally, some of the technical indicators, they come back into oversold territory. So there is a relief rally which generally shapes up from those oversold indicators. The second way to look at it is from the expiry front, because it's the crucial expiry for the month of February. I call it crucial because this month has been one of the spectacular months for many traders, especially post budget or from the start of the budget day itself. So I think that aspect as well, we need to see how many positions or how much of the positions do get carried forward from the market participants. So I think these are two very, very important aspects to watch out for, because these would not just set the tone from a short-term view, but these could set the tone for the next few months as well. So this becomes very, very crucial parameter. On one hand, when you look at the global markets and especially the Asian markets, today there is a lot of jitterness across many of the Asian markets. But I think till the time the indices hold up to their support levels, I don't see any major cool off happening. Largely, I believe 14,600 to 15,000 as now being the broad range for the Nifty, and possibility that the Bank Nifty could slightly outperform over the next couple of days is very much of a high likelihood.
Kunal, pleasure speaking to you. This is Alex. Thanks so much for joining us today. And I take your point on the expiry, and that's something that we'll have to watch out for tomorrow. But having said that, what are your short-term your high risk and low risk ideas that you can share with our viewers?
Great. So great to speak to you, Alex, as well. Now, I would suggest a couple of buy calls. Now, going with the theme that many of the mid cap names are going through a strong bout of recovery, and many of the stocks are showing breakouts as well. If the market goes into a range bound mode and the volatility increases, I would expect that possibly the FMCG stocks to pick up pace. So I'm going with two themes. One of them is contrarian. First, stock which I'm suggesting is about Godrej Consumers. Now, interestingly, the stock from 800, 820 levels has corrected to sub 700. So it's almost completed 140 to 160 point correction in the last 1 month. So that's approximately 20% of correction. It's come back towards strong support zone just below the 200 moving average as well. So the mean reversion process also seems to be over. Because of this correction, the indicators have come back into oversold territory on slightly higher time frame charts. So on the back of this, I would expect Godrej Consumers as a good contrarian pick from current levels. The risk was also quite favorable. So would expect a bounce till at least 740, 744 levels. Stop loss could be kept at 650. The second stock which I'm suggesting is purely momentum based. And I think I had given the stock on the show yesterday as well. It's about Snowman Logistics. Interesting chart shaping up. Whether you look at it on the longer term time scale, on the yearly charts or on the monthly charts, where the stock has confirmed breakout of those multi-year downtrend by breaking the pattern of lower highs and lower lows, or whether it's the short-term patterns where you're seeing a revival and a reversal from many momentum indicators for Snowman Logistics. So I think that's the other mid-cap name which is already up, I think 7% or 8% today so far, but should could do pretty well from current levels as well. So would raise the targets higher on Snowman. I had given targets of 64 yesterday, would revise it higher to 70 plus. Traders could look at a fresh buy even at current levels, and stop loss could be kept at 47.
All right. Request you, Kunal, to stay on with us. Right now, my colleague Nayantara Rai is in conversation with TV Narendran on the sidelines of CII event. Let's cut across to that.
Well, just a couple of hours ago, we had seen the Fed Chair Jerome Powell talk about how the best kickstarter for the US economy would be a massive rollout of the vaccine drive. Taking that as a cue, joining us today live on ET Now is the chair of the CII COVID-19 task force, a high-level task force that is engaging with the government on how the private sector can chip in. And the head of that task force, TV Narendran, also the CII President Designate, is with us. Mr. Narendran, always a pleasure talking to you. This is Nandara Rai. You're heading that high-level task force. You're making a case for how the private sector must be involved in the vaccine rollout. My first question to you is, do you want to do that only via CSR activities, or are you looking for more participation where the private sector will be involved in distribution and even inoculation?
Sure. Thanks, Nayantara, for having me on the show. Primarily what CII has been saying is that, there is a need for us to get private sector involvement into the task force, into the vaccination. Basically, private sector has capacity to vaccinate. And if vaccines are no longer the bottleneck, because the original thought process was there is a vaccine shortage period, a vaccine adequacy period, and a vaccine surplus period. But it looks like what we hear from the vaccine manufacturers is there are enough vaccines. So if the government needs support to vaccinate more people with the oversight of the government, as per the priorities identified by the government, the private sector can step up and at least in the initial stages, leverage the distribution network that we have, leverage the vaccination capacity that we have. Some of it is already being utilized by the government for vaccination and vaccinate more people. And I think it's important to get more people vaccinated because it helps economic recovery over a medium to long term point of view. And secondly, a lot of the vaccine hesitancy gets addressed when people see more and more people who are vaccinated around them. So I think in multiple ways, it's important to do this. We also feel that if there are vaccines out there and we sometimes that vaccines may expire, there's a need for us to use them before they expire.
Absolutely. Like I was saying, the Fed chair said that one of the best stimulants for an economy would be a massive vaccine rollout. And that is the case in India. We're getting ready for phase 2, which is going to be a very challenging one, Mr. Narendran, with the government talking about inoculations for those aged 50 and above. So once again, what does the private sector want? It wants vaccines to be allocated for its employees and family members. Is that the big ask?
So I think what we're saying is, firstly, let the government keep aside what it needs. The government can define how many million vaccines it needs to vaccinate the people who are being vaccinated by the government. There are many over 50, who can be vaccinated by the private sector, either because they work for the private sector, can afford to pay for it. So maybe the private sector should be allowed, after the government has taken its quota of vaccines, to use the vaccines that are available and, vaccinate people who are willing to pay for it, or the corporate sector can, decide to vaccinate its employees and its families. But basically, the burden is not on the government, both on the vaccination and on the cost of vaccination. What we should do and can do is, of course, plug into the COVID app if, that's essential, because I guess at some point in time, a certificate from the government will be required if you want to travel and things like that. So we can integrate it with the government's existing protocols, so that we are not doing it outside the government protocols. We can do it as per the priority identified by the government, which is over 50, because there are 300 million people out there to be vaccinated, even if you look at people over 50. So that's going to take a long time if we don't augment the capacities that exist. And your first question on the CSR, which you'd asked, we are saying yes. If some of it can be considered a CSR, fine, but I don't think we need to be limited by that.
Okay, that's good to hear, because, there's always a perception that India Inc. cares primarily, as it really should, for its bottom line. In the long run, of course, they would be good, like you talked about, how it would pick up economic activity. So you're basically saying that India Inc. is prepared to chip in even outside of CSR initiatives.
Absolutely.
And Mr. Narendran, when you're talking about the private sector participation, besides inoculating employees as well as their immediate family members, what else can the private sector do? Look at the longevity of these vaccines. You all can play a very big role in just making sure that there is full utilization.
Absolutely. So one is to make sure that the vaccine producing capability that exists and the capacity that exists in the country is not underutilized, doesn't go to waste, because we have a large population to vaccinate, right? So I think the sooner we get onto it, the better. And as we complete more and more people over 50, then we can also focus on the others, because the youth are also very important from that perspective. So to me, that is certainly one area. The second area is in communication, because I think there is still a lot of hesitancy. I mean, I hear numbers ranging from 40 to 70% at different sites for vaccination. I mean, only 40 to 70% of the people are called land up. So again, here, I believe that as more and more people are vaccinated, the hesitancy will drop. People will see others around them who have been vaccinated and are fine. And the third part is, of course, to keep communicating on the hesitancy aspect. And private sector can again play a role there to help communicate on behalf of the government and otherwise that this is something which people should do, for greater public good.
Mr. Narendran, you're heading this high-level task force. You're engaging with members of the government. Can you give us an idea on whether the government is on board of opening up the vaccination program, whether it is for distribution, whether it is for inoculation and all of that to the private sector?
I think the government is, quite open to it. They are obviously discussing what could be the downsides of it. How do we make sure that the poor and the needy don't get left out in the process? It should not be that private sector corners all the vaccines. That is certainly not the intent. That's why I'm saying first is let the government get all the vaccines that they want, and wherever private sector comes in is either to help the government vaccinate with the vaccines they have, or to vaccinate with vaccines which the government doesn't need. I think we are being clear that we are not wanting to step in the way of the government. We're wanting to help the government augment their capacity, and government is open to that. I think they just need to work the protocols. I also think they need to make sure that the COVID app can handle, the scaling up of the vaccination. So there are a number of things that the government is dealing with, is concerned about. We are optimistic that, the government will take our suggestions on board positively and help the private sector, help the government.
Now, like you said, the private sector should not be hoarding all the vaccines. That is a concern. But the problem also is that all corporates are not very responsible. You're going to need very proper checks and balances. So how should this pan out? What kind of corporates, who from the private sector, just to make sure there is not so much discretion? Because, we know what happens when discretion is at play. Isn't that an area of worry?
Sure. So that's why I said first step is to make sure the government gets as many vaccines as it wants, and whatever private sector is beyond that. Second is you could even fix a price for the vaccine so that, let it be a price control kind of regime, at least for some time, till there are enough vaccines out there. So the price can be fixed by the government so that, even if private sector is involved, it is at a fixed price, which can be monitored by the government. Thirdly, all the vaccination can be done using the government protocols and logging onto the government system, the COVID app, using Aadhaar cards as identification. And all that is also essential for the person being vaccinated, because later you will need some government documentation to prove that you've been vaccinated. So we're saying we will integrate with the government platforms that there are, and we are not trying to work this outside of the existing systems. So I think there will be enough oversight, and there can be enough oversight, and in a worst case scenario, the government can always pull back the permission. If it finds that things are not under control after a few weeks or a month or so, can always pull back. So you're not denying yourself that opportunity as well. So we believe that we should move forward. We should look at how we can augment what is already done. India has done a great job in vaccinating as many people as we've done, but I think we can do much more.
Mr. Narendran, before I let you go, I know I asked you for this interview because of the COVID-19 vaccine task force, which you are chairing and working with the government on. But since I have you on air, I will take the opportunity to ask you to understand what's going on in the base metal market. And if you look at steel prices as well, do you think we're going to see this kind of a rally continues? There's more upside left? What are you factoring in? It would be great to have your views.
I think in January, there was some softness simply because people were concerned in the days leading up to the Chinese New Year. Vietnam was also closed. These are two big countries as far as metals are concerned. But I think after the Chinese New Year, the Chinese futures market has been very strong. Steel prices have been strong. Other metal prices are also strong. So I think overall, last year also the recovery after the pandemic was led by China. And I think even now China is pretty strong. So I don't see, I'm not saying that this metal prices will keep going up, but I don't see it going down in a significant way in a hurry as long as the demand supply balance is where it is. And, we are seeing other input costs going up. Iron ore prices are at pretty much all-time high. Scrap prices have started going up because China started buying scrap. So I think across multiple inputs, costs are going up, and which means the metal prices should be, around these levels or in a narrow band at these levels and not going back to where it was 1 year back. So that's the way I see it.
And this is all demand and supply at play. There's no distortion just because of the gush of liquidity, or even
So
what you see
obviously
with the US dollar.
Yeah, so globally, yes, liquidity plays a role. I mean, there's a lot of liquidity in the system, a lot of stimulus by multiple governments has certainly led to it. So that's certainly one part of it. But the other part is, like I said, the China recovery. Even if I look at a product like steel, China used to be a net exporter of steel to the tune of maybe 40, 50 million tons. And now it has become a net exporter of 20, 30 million tons. That makes a lot of difference in the world demand-supply balance. So I think, for me, two things. One is liquidity has certainly helped demand across the world. But to me, the China recovery has been much better than anybody imagined. And that is certainly driving global commodity prices.
So, Narendran, I won't take up much more of your time. It's been an absolute pleasure interviewing you. Let's see how the government responds to India Inc.'s suggestions of playing a larger role, not just via CSR, for inoculating employees, immediate family members, playing a role in distribution as well, and for the larger community. As TV Narendran just said, try it out. If it doesn't work out, the permissions can always be pulled back. Many thanks. And with that, it's back to you folks in the studio.
Thank you, Nayantara.
All right, thanks Nayantara for that interview. It was quite insightful, in fact, and we got the bonus on his view on metals as well. But let's go back to the COVID situation, because there are developments in the national capital. The Delhi government has in fact written to the centre asking for COVID reports of people travelling to the capital city from 5 states. And this comes soon after the Mumbai International Airport resumed the practice. Utkarsh has more details on the story and is joining us live. Utkarsh, what are you picking up?
So the Delhi government has gone ahead and written to the centre, as you said, asking for a COVID report and a COVID negative report while travelling to the 5 states. The 5 states we are hearing in this point of time is Maharashtra, Punjab, Chhattisgarh, MP, and Kerala. Now, obviously, Kerala and Maharashtra are the two states where the number of COVID cases have risen substantially, and that's why the Delhi government wants to take these steps to make the spread of, to contain the spread of corona. The point here is, one, obviously, when it comes to the Delhi-Bombay traffic, it will be a huge impact, given the fact that Delhi-Bombay contributes to a much larger traffic than many other tier 2, tier 3 cities. It's one of the busiest routes, not only in the country but in the world. Delhi-Bombay traffic. But so that will be impacted, and that is something which can be worrisome for one, the passengers, and more importantly, the aviation companies. Also, it is also shown the fact that the era of having COVID positive, negative reports, and the era of we were expecting that the summer schedule will open up the skies completely. But with really regulations like these coming in Delhi, already in Mumbai, it seems like it is some time that the skies completely open up.
All right, Utkarsh, thanks so much for that update. We're slipping into a short break, but do stay tuned. Lots more coming up on the other side. Welcome back to Buy Now, Sell Now on ET Now. It gives me pleasure to introduce my second guest today, and that's Gaurang Shah. Gaurang Shah is Senior Vice President of Geojit Financial, as you well know. Gaurang, pleasure having you on the show. And a lot is happening as of now that we can speak about, right? We had TV Narendran speak about the metal prices. In fact, yesterday a lot of people were watching out for what the Fed Chair, Jerome Powell, has to say. But I know that you look very closely at fundamentals and you look at companies. What, according to you, are the top picks that we can look at right now?
Thank you very much, and morning to all of you. So I think after seeing a phenomenal rally from 1st of Feb since the union budget unfolded till about 10th or 11th of Feb, we've seen a little bit of consolidation. Last 2 weeks was caught by profit booking. We made a bottom at lower level, and now we are back on the recovery process. So in this recovery process, we believe there are two investment themes from the broader market. One is from the gas distribution sector, and that is MGL, that is Mahanagar Gas Limited. This company has got virtually a monopoly in Mumbai and surrounding suburban areas, along with in the city pipe gas, that is gas supply to household. Along with that, this company also present in city gas distribution, dedicated gas distribution stations they have. And as the government unfolds the great infrastructure pan-India for distribution of gas, I think this company will tend to benefit from a longish time horizon. We are targeting about 1380 to 1400 on Mahanagar Gas Limited. And the second one is again from the broader market, mid-cap cement company called Dalmia Bharat Limited. A great set of numbers for the third quarter, and I think the run rate should continue going forward. 1700 is the target from a long-term point of view.
All right, Gaurang, thanks for your picks. Let's quickly pull up the Buy Now, Sell Now stock cloud as well to give a sense to our viewers of all the individual stocks to keep on their radar. Starting with two names which are in focus on the back of Nifty rejig, which will be effective 31st March 2021. Tata Consumer is set to enter the elite Nifty 50 club, and it will be replacing GAIL. Then you also have Kajaria Ceramics in the limelight on the back of some bulk deal action. Small Cap World Fund has sold about 5.3 lakh shares of the company, declared to the buses yesterday. Then you have Sanofi India and Stuffcraft, both result candidates that are hogging a fair share of limelight. You also have a Minda Corporation. They've incorporated a wholly owned subsidiary that will focus on devising and supplying parts for electric vehicles. The likes of Bharti Airtel and Gabriel India, two stocks to watch out for. Then you also have heavyweight Britannia. Motilal has upgraded the stock to buy with a target of 4,120 rupees a piece. And finally, there is HDFC AMC. Jefferies has initiated their coverage as their top pick in the AMC space in the country. So there you have it, all the stocks to keep on your watch list today. Viewer queries as well then. Both Kunal and Gaurang are here to help us out and our viewers out with all their stock-related concerns. First up is a Twitter query. Vigneshwaran writes to us, he has bought shares of Reliance at 1900 levels. He wants to know whether he should stay invested or book his profits. Kunal, coming to you first on Reliance Industries. The last 1 month, there's been a good uptick on the stock price from 1800 odd levels to now comfortably at 2050 levels. Do you think it's a good time to book profits, or do you see further up move on this counter?
So there are many moving parts, for this. First one, of course, is the underperformance of Reliance Industries from the September 2020 highs, when the stock was at 2,300 levels, and compared to that, the Nifty has rallied more than 35%, and Reliance, in fact, has corrected from those 2,300 to at one point being at almost 1850 levels. So I think in that respect, yes, there's been a big divergence and big underperformance from Reliance Industries, and which is why I think the probability of a catch up for the stock is very much high. Now it's a matter of time that probably when the stock breaks past about those major resistances and gets back into line in terms of being at par performer, if not being an outperformer with respect to the index. Now the second portion is the multiple resistance which you're seeing at the 2,100 level for Reliance Industries. I think if I'm not wrong, for last 2 months, there were 3 attempts or 4 attempts towards the stock trying to break past about 2,100 level, but it's failed to do that. So I think it's taking its own sweet time to consolidate at this 1,900 to 2,100 range. Since you bought at a lower level, you already have a cushion and a buffer in that respect of almost 150 rupees from your buying price. So I would advise a hold on Reliance Industries. A break pass above that 2,100 level would set up a very strong upside for RIL. Maybe even a retesting of those 2,300 levels could be a high probability. So I would suggest a hold on RIL, and would expect that if the stock breaks past about that 2,100 level, it could result into the stock coming back towards its all-time high levels as well.
All right, so it's a hold on the technical side, but Gaurang, coming to you on the fundamentals, what do you think with regard to the latest update, of course, that we got over the weekend, something perhaps that was in the works for a while, but now we know that it's certainly moving towards the demerger of the O2C business, the oil to chemicals business, and that likely happening in the second quarter of the next financial year. What kind of an impact do you think that that's going to have on the company, on the valuations, and should the viewer that has written in hold on to their investment?
Firstly, we do have a long-term coverage on Reliance on a fundamental aspect. And my advice to this gentleman would be that not only to hold on to the stock, but he can even add to the stock, even at current levels or on dips. Now, this news of entire restructuring of O2C business, that is oil to chemicals, I think it's going to unlock tremendous amount of value. Along with that, you have the new generation businesses contributing to a great extent with respect to geo, retail, and of course you have the traditional businesses also firing up on all cylinders. On the long-term prospect, we have targets of 2600 plus. So if you're not in a hurry, stay invested and add on dips would be the advice.
All right, well, there you have it. That's the view on Reliance Industries. It's a hold, and in fact, Gaurang says that you can buy more. R. Subramanian from Bengaluru has written to us and has said that he has bought 30 shares of Valiant Organics. He says that he's facing a loss of 10,000 rupees on his investments. He's asking whether he should hold or exit. He's got a medium-term horizon or medium-term time perspective. Kunal, I do want to come to you. It's a small cap stock. I do not know how much data you'll be able to pull up, but on the charts, does it indicate that this gentleman should hold on at least for the near term?
So yes, a very restricted amount of data, Alex, for that. And from whatever data I can see in the last, I think 4-5 months, 3-4 months precisely, I think from those 1900 levels, the stock has been just about consistently grinding lower, making a pattern of lower highs and lower lows. So I think it's difficult to really comment on the longer term prospects because the data is very restricted. But of the limited amount of chart patterns which I can see, the illiquid nature of the stock price, where you see less amount of volumes. I think the tune of volumes is almost 10,000 to 11,000 shares, which is very very minimal or illiquid in that aspect as well. So I think on those aspects and looking at the downward drift, I would expect that the stock would continue to drift lower and would suggest an exit from the stock.
Okay, Gaurang, do you concur with Kunal's view on Valiant?
Well, unfortunately, Karanya, we don't have a coverage, so I won't be stock specific. But in case if you're not comfortable, first of all, if this is a short to medium term trade, you need to be extremely disciplined in the market. You have to surrender to the downward moves of the stock and book the losses whenever your risk appetite on the lower side gets triggered off. If this gentleman wants to look at an alternative investment idea, then I think in the peer sector, something like in the pharma, if you will, Cipla would be a recommended stock. Otherwise, you can look at Axis Bank from the private sector banks amongst one of the large cap names. Amongst the housing finance, I think the big boy HDFC Limited would be a preferred bet, and cement and metal is something that we are tremendously excited about, Karanya, over there. And I just suggested Dalmia Bharat from the mid-cap universe in the cement. And if I have to suggest one name in the metals pack, then that would be two names. You can pick either of them, Tata Steel or JSW Steel.
Okay, then. All right. Thanks, gentlemen, both of you, Kunal and Gaurang, for your views on different stocks and for helping our viewers out. It's always a pleasure chatting with you both. With that, we're slipping into a break. When we come back, we'll get you more stock-specific updates and insights. Stay tuned. You're still watching Buy Now, Sell Now right here on ET Now. And as promised, we have some stock-specific news and updates lined up for you. Top consumer products will be replacing GAIL in the Nifty 50 index. It'll enter the blue chip benchmark index for the first time in its history, making it the fifth Tata company becoming part of the elite Nifty 50 club. Vivek joins us for more details.
Well, this particular week has been a busy week as far as indices managers are concerned. We first told you about how the MSCI weightage changes would be happening this week. We had also told you about how FTSE had made a whole host of changes across the FTSE All World Index, where a whole host of Indian companies were impacted. Now it's the turn of NSE, and NSE too has given a broad-based review with a whole host of changes across most of the indices that the NSE manages. The most important change, of course, is on the Nifty. You're actually seeing Tata Consumer Products entering the Nifty with a 60 basis point weightage, and it would be replacing GAIL India. Along with the Nifty Bank too would see a change. AU Small Finance Bank would be replacing Bank of Baroda in the Nifty Bank Index. There are a whole host of other changes as well, but let's focus on Tata Consumer. Now remember, Tata Consumer would be the fifth Tata Group company that would be entering the Nifty. So overall, TCS, Tata Motors, Tata Steel, Titan and Tata Consumer together would be having a 8.1% weightage within the Nifty, and this would only be second to the HDFC group that has a weightage of 18.8%. Amongst the other companies that have a higher weightage, Reliance Industries of course leads the pack with a 10.8% weightage. The other interesting thing that has happened as far as the Nifty is concerned, the Nifty currently has 7 FMCG or consumer stocks, which is the highest proportion of consumer stocks as far as the last 15 years is concerned. So amongst the stocks, HUL, ITC, Asian Paints, Nestle, Britannia, Titan and Tata Consumer, of course, are the FMCG stocks that are currently trading within the Nifty 50.
One of the factors that companies have had to deal with since the unlock and the return of activity is the rise in raw material costs. It's something that we spoke to Dollar Industries MD Vinod Kumar Gupta about, and here's what he had to say.
What about the raw material costs? How have they played out for you in the recent past? And is there any cost-related challenges you foresee, and any trends that you'd like to highlight?
The prices, of course, across all the sectors. I mean, all the raw materials which are being put into to make an innerwear. The cost prices have gone up drastically in last 3 months. Soon after Deepavali, the prices of cotton and cotton yarn have gone up by more than 30%. We have been crying before the government to look at the entire situation, because there is a huge demand of cotton yarn from outside the country. So ultimately, all the spinning mills, they are running very in a tight position because they need to complete those export commitments well into time. So because of that, there is a little bit of gap between demand and supply of the cotton yarn, because of which the cotton prices have gone up drastically. And all the other raw materials, like if you talk of accessories, whether it is a plastic, it is a packing material, or even the elast band, and the prices have gone up by more than 30%. But then that's not a challenge, as and when the prices of those raw materials are been up in the market, we also are compelled to revise our prices. We have already revised our prices thrice until now, and 2 more revises are into pipeline. So prices, of course, are rising, but then so as our prices to the consumers as well.
Welcome back to Buy Now, Sell Now on ET Now. Well, a short while back we told you about the technical glitch on the NSE platform that essentially froze all of the rates on the indices on that platform. We're hearing now, in fact, that the NSE has informed that trade on both cash and F&O has been halted, and that it will inform when that trading restarts. For now, Jayesh Khilnani, who has been tracking this, is joining us live to tell us a little bit more about that. Jayesh, what are you picking up?
So, Alex, essentially it all started at 10:08 a.m. When the index rates on the NSE actually froze, and we had no updates coming in for the Nifty Bank, or even any of the other indices. But at that point in time, the stock futures, the index futures, and the stock spot prices, those were updating properly. However, as we understand now, as of 11:39 and 11:43 a.m., there has been a halt in the cash market as well as the derivative segment for the stock futures and stock spots as well. What we understand from brokers is that NSE has shut down systems and they will restart it. Also that they will inform the restart time once they have some clarity. But I was just going through the NSE website, and unfortunately there has been no update whatsoever from NSE in terms of any communication to the brokers or even via a circular. So I can see that the Nifty futures rate also now has not updated ever since 11:40, so that is 15 minutes past, and there is a lot of anxiety in the trader community because there are open orders that market participants have. Of course, from one of the brokers, I did understand that this can be sorted out if you have been in the cash segment, because you can square up orders on the other exchange, which is BSE, and that seems to be working properly. However, for the futures market, there is no clarity, how the futures will actually be settled, or the options that are outstanding in the market, how those will be settled. And also remember that, it's a very important day of trade because we are just one day away from the monthly expiry. So trading volumes generally pick up, on the day prior to the expiry as well as the expiry day. So in the entire community, there is a lot of angst at the moment, but there's been no update whatsoever from the National Stock Exchange.